Okay, good afternoon again, everyone. Here we are, day last of the show. Spectacular show. I hope everybody's enjoyed themselves. We're here today to talk a little bit about uranium, and thank everybody for showing up. Give you a bit of a background on what we're going to be talking about today. We're going to spend a little bit of time talking about uranium, the uranium price. People are watching spot price. There's a lot of, it's not very transparent. There's a lot of things going on behind the scene, and it's not a normal thing. There's not a market for uranium. So these numbers that we see are actually numbers being negotiated between producers and utilities. There's not necessarily a mechanism in between. You can't what the spot price of uranium is right now. It doesn't exist. But we're going to talk a little bit about that. We'll talk about what's going on now and why we're all getting very excited about uranium. We've all been waiting for this. We've known the economics underlying what's going on right now. We've been waiting for things to kind of happen and show themselves, and that's what we've been seeing certainly in the last. So we're going to talk a bit about that. And then obviously we're going to have to talk about us. Purepoint Uranium, we're a uranium exploration company. We've been well established in northern Saskatchewan, Canada for quite some time now. We've got 12 projects in Canada. Some of which we partner with Cameco and Orano on our exploration work there. I'll point out, we'll stop a few times if people have questions as we're going through this stuff. We can stop and make sure everybody's, anybody who has questions. Okay. If something doesn't look right or off, or you have a question, by all means, put up your hand. You won't throw me too badly by damaging my pace here. So we'll start by talking about uranium prices, and there's a number of things that make uranium somewhat unique as we watch it. And the first thing is the size of the market. I mean, it's relatively small. A lot of that is attributed to the fact that it's a very efficient fuel. So right we are, the amount of uranium demand that is on this planet is about 62,000 tons a year, which is about $6 billion, as opposed to the amount of coal we go through, which would be $600 billion, and billions and billions of tons of coal, et cetera, et cetera. So one of the aspects of the market that has made it a little bit different is its size. And the fact is, from an investment standpoint, we've not seen a lot of institutions and funds and things making big investments in uranium because there really is no place to put $100 million or $500 million. It's just too small a market to do that. And unless you're going to just put a bet down on any particular producer or development company, of which there's only a handful anyway. So because of its size, that's one of the reasons why it's not always on everyone's roadmap. The other thing about it is that of uranium is somewhat inelastic, and that is when you're generating nuclear power, the uranium fuel only represents about 10% of the cost of generating that electricity. If you doubled the cost of uranium, you're going to see the price of it go up by maybe 9%. Whereas if you double the price of gas, you're going to see the price of a kilowatt hour go up by 66%. So most of your other energy sources, the fuel is the primary component, and it's not in the case of uranium. And what that means is that as the price goes up, it's not going to slow down because the price is too high. Once you turn around, you better know where the fuel's coming from because you can't shut it off. So the fuel will be bought no matter what the price is. And so you'll see the price jumping around. If the price goes from $40 today up to $80 tomorrow, it bought. It won't slow down the purchasing of the uranium. The other thing about the spot price, which is what we follow the spot price. It's reported daily, and when you're looking at these prices, they're specific to contracts that have been written by a producer and a utility, or possibly a trader in between, but a lot of them. So typically your spot market makes up 15% of the uranium that's being sold. Historically, uranium that is sold in long-term contracts, 5 to 10 years out. So those that come out daily if you pay for the service. Typically, most people are looking at it on a weekly basis. And the spot and the long-term price, it only comes out for the most part once a month. So we don't follow it on that regular basis. The other thing about price is that most of the long-term contracts aren't reported. That is, they're mostly off-market. It's a big utility going directly to Cameco and cutting a deal for uranium for the next 5 years, and those contracts are never reported. They're not tendered out, and the utilities aren't reporting them after the fact. So we don't publicly on a regular basis. We see them in aggregate as they put out financial statements or when the product actually. So as we're following the spot price, we're only looking at a very small piece of what's going on, and we in fact can't most of it. It's 60% of it is pricing that we just don't see from day to day. So we saw the long-term market price move to $40 at the end of September. Again, that's only based on a handful of contracts that were reported. I mean, we know that Cameco and Orano and the others have long-term contracts at various prices, but we just do not know what that is. And this comes back to the number of trades that are going on too. The spot price that we see on a month is based on maybe 10, 20, 30 at most trades in a given month. Long-term contract price that we rely on, that we see once a month, is maybe based on 3 or 4 contracts being written. So there's not a lot of liquidity in the market. And again, we see a lot of jumping around to these prices, and it's hard to gauge kind of the cause and effect when we do see it moving around. So where other commodities are traded on open markets, and you see millions and millions of trades on an ongoing basis, uranium transactions are very small. What it's based on. The other problem with tracking pricing is the origin of where this uranium comes from. So right now, 25% of the world's nuclear reactors are in the United States. China is second, France, Russia, Canada. But uranium doesn't, the United States right now is not producing any uranium. China has not even close to enough uranium resources to fuel what they're doing. So you see that the fuel actually, resources are living on the other side of the graph. Australia has the most reserves right now, but Australia has a moratorium against nuclear reactors. So they sell theirs outside. Same with Kazakhstan, who has the lowest cost uranium in the world. They have no themselves. So there's a lot of politics behind who's getting what uranium and where it's going and how it's going in the system. It's not that efficient a market as well. And countries like China, they are cutting separate deals with Pakistan, and China stockpiles most of what they're buying, and it'll never see the market. So to really understand the supply out there of what's available in uranium is very difficult, and people spend a lot of time and making a lot of assumptions what in fact is out there. So where it all comes back to is volatility. So what we've always seen in the uranium market, the uranium price, as we're watching this uranium price, is that it jumps all over the place. This is the price going back to 2004. It peaked at about $140 back in 2007, and it's been bumping and turning. We've got this is where Fukushima occurred, and the tsunami hit Japan. We've had some false starts, but they were really based on factors that we couldn't really speak to. As a matter of fact, when we go back and look at the jumps up and down in uranium, we see these large things of of pricing. In 4 weeks, they're going up 10%, down 20%, up 30%. So it is very volatile, and it's very, very twitchy. So, I mean, is anybody, we're going to move on to kind of what's going on now. But if anybody's got any questions about how we watch this price and what we think is going on, feel free to put a hand up. Yeah.
You mentioned some previous increases in price false starts. Do you think this one might also be, or do you see different underlying fundamentals?
The question was whether this is another false start we're looking at right now, and the quick answer is no. I mean, we can very easily see now what is happening and what's occurring and why it's happening. So we have a little bit more visibility into that, and actually the Sprott Physical Fund has kind of opened up the visibility into what is actually out there. And I'll go into that right now. Actually, I can talk about because the supply has been the issue for the last 10 years. So what you're looking at here is, again, this is the spot price going back to 2011. And at the beginning there, you see where the tsunami hit Japan, and Japan shut off, of caution, about 10% of the world's nuclear reactors. At that time, though, it wasn't just those reactors being shut off that caused a problem with supply and demand. Kazakhstan started producing uranium maybe 10 years earlier for the first time ever. And they're low cost, and they started flooding the market for the most part with low cost uranium on an increasing basis for quite some time, on top of what everybody else was producing. So what we wanted was in the system way too much inventory in various parts of the system. And as a result, we saw that the price coming down, and it stayed down. And as a result of it coming down, we saw a lot of other things coming from that. What you see in gray there is the incentive price. So below that, you can't make money. Nobody's making money producing uranium, and you have to at least be in that, get into that gray zone again before it makes any economic sense to turn a reactor on that you've or a mine on that you've turned off, or to build a mine from scratch. So as you can see, the price has been low for close to 10 years, below anybody's ability to manufacture it at a profit. And what we saw were a lot of planned shutdowns and reductions in supply. As I mentioned, right now there's no uranium being produced in the United States anymore. Some of the world's biggest mines shut down purely for economic reasons. Put off. Kazakhstan has in fact been forced to kind of turn the tap down a bit too, because it wasn't moving. And then on the other side, we also had a lot of unplanned disruptions. So we saw a lot of the bigger mines like Rosinger Ranger or Olympic Dam running to operational problems that kind of slowed their production down. And of course, early last year, COVID-19 managed to shut down a whole host of uranium mines and took about 20 million pounds of uranium off of the 2020 plan. So through this period of time, we've just seen decreasing production over and over and over again. And although at the time of the tsunami, production levels had been coming down anyways, it kind of made it worse. So this is the change in production, global production from 2021. And so, right out of the gate, you see, well, it's taken them a while to actually start dialing down production after the price was dropping. And in fact, it's only been in the last year or so that it's gotten down below levels that we saw back in 2011. But what's interesting is when we pull out Kazakhstan, if you take out the production in Kazakhstan, it looks like this. So in fact, everybody else was actually working hard to reduce production because they weren't making money on it. Got production levels below quite some time again and brought them down significantly. If you just look at Kazakhstan's numbers, after the wave hit Japan, they didn't even miss a beat. They just kept pouring more and more uranium into the system. And so that's why everybody's been kind of, when is this going to turn around? When can we chew through enough of this uranium to rebalance your supply and demand? Yes, sir.
With the problem at Cigar Lake resolved?
The problem, the flood you're talking about? The flood occurred back in 2006, 2007. So it was resolved. Oh, they started that up quite some time ago. It's been up and running. Now, Cameco shut down McArthur River, which is the neighboring one, which was the big producer, and Cigar Lake wasn't shut down. And I think they would have shut it down, but Orano wasn't on board with that. They're one of the partners in that mine. So, but all of the other, Cameco has shut down all of their other mines in Canada. So, you know, what we've seen then over the last 10 years is this. And as I said, production decreases were starting well before 2011. Yes, sir.
I think that's one of the bearish arguments people make for uranium long term. There's a lot of supply out there that causes non-calmatic space for Athabasca and it being state-owned, at least partially state-owned. There's potentially a flood of supply in the future.
That there'll be a flood of supply in the future?
Once we get up to 50, 60, 70.
Well, what we also saw through this is there's a lot of mines falling off the other end because Kazakhstan's pricing is so low. You know, Olympic Dam's you know, cost of production is at the other end. So a lot of these mines are either coming to the end of their economic life, and many of them just won't be able to be turned on economically and compete with the Kazatomprom world. So that's, and again, you know, Kazatomprom appears to be doing other transactions directly with other countries, like they've been working with China, working with Russia. So a lot of their uranium necessarily going out into the masses as well. So we'll see. I mean, you know, it's so small and the dial turns a little bit and things start flipping around. It's hard to see where it goes. Yes, sir.
Too basic, but I don't know anything about uranium. The only uses I can think of are bullets, armor, for military applications, energy applications. Why is demand going up and who's buying this stuff and what are they doing with it?
Okay, so the question was what's uranium being used for in all these diabolical ways and where is it all going? Well, yes, I can tell you all of the 100% uranium that is produced now is used for energy. There's a small parts that's used for metal use, but it's not moving into defense. Now the DoD in the States actually holds leases on a number of uranium assets, and so they have the store of and want to make sure they've got their store of that because it's a critical metal in the United States. What's being produced is all being used for energy.
I'm trying to wrap my head around why should there be a price rise now and why should it be sustainable over the long term unless there's an increase in demand. So, or a decrease in supply, mine's not offline. Why? What are they going to do with this uranium that's going to keep demand and prices high?
Who's buying the uranium? Okay, well, they are building new nuclear reactors. If that's the answer, then that's the answer I got. It's
well, if I said something else,
yeah, I might have a different answer for this gentleman over here. No, yes, there's a lot of reactors under construction now. A lot of them are in China. What has happened lately that is increasing your demand part of it is that 10, 15 years ago, nuclear and radiation and the horrors of Chernobyl. And today, it's carbon is the enemy. And nuclear is not more as a green energy source than some dangerous glowing rock somewhere. So that's changed. The whole attitude has changed significantly. So there are a lot of reactors under construction now. But I would say that as energy needs grow, and of course it's a hockey stick with the world in terms of electricity, you're going to see. Yeah, I think you're going to see nuclear pretty much maintain its share. You're seeing, you're seeing natural gas and wind and solar picking up a bigger share, and they're eating up coal's share for the most part. There's going to be an ongoing steady rise in nuclear reactors moving forward. But again, who's buying it? The problem we've got here is what you're looking at. This is the gap between what's being produced and what's being consumed on an annual basis. So production is so low that, the last 5 years we've been producing 20 to 30% less than is actually being consumed. And so this excess inventory that's in the system is being reduced, which was the objective at the end of it. because that can't go on forever.
At one point, will that, you know the reserves, I'm assuming, at what point will that be depleted at those kind of rates?
2 months ago. Going on right now. I mean, that is the answer as to what's happening. And that was the question. We didn't know. I mean, how many times have you come to this show and somebody's gone up there and said, watch uranium because supply, demand, and it's going to go through the roof. We just don't know when, right? I mean, Rick was peddling uranium for the last 5-6 years, but he wouldn't comment on when because nobody really knew what was in the system and how much we were trying to chew through. And in fact, the Sprott fund that we were just talking about has helped us in that regard. So here is the change in prices since the beginning of 2018. So the red line is your spot price, and you can see, you can see where COVID kind of gave it a pop over here, and a blue line, the dead blue line, is your long-term contract price, which is sat at $32, $33 for the last 5 years. The yellow line is the Sprott ETF. We can talk a little bit about that. What they did, they took over management of what was called Uranium Participation Corp. And Uranium Participation Corp was managed by Denison. They acquired and held physical uranium, but not on a regular basis. They would acquire it every year or two or do a raise and pick it up, and it somewhat mirrored of uranium. They took over management of that and turned it into this ETF, and they're now buying on a daily basis for the most part in the spot market. Is what the Sprott fund is doing. The black line, that is kind of a composite of the stock prices of all of those uranium companies you see there on the bottom left, which is pretty much all the public uranium companies going on today, your producers, developers, and explorers. So what happens is you see that the equities continued to languish as the price of uranium laid flat. We've seen everything kind of snapping to attention and starting to track each other. And what happened was, so July of this year, as I mentioned, the spot price is based on a handful of trades a week. All of a sudden, somebody entered the market buying it every day. And what the fund did, not so much was eating up inventory as demonstrating the fact that there's not an endless supply of discretionary uranium sitting on the spot market. So while all the utilities have been buying on the spot because it's cheap and it's available and not signing long-term contracts, they didn't know when all this was going to end either. What the Sprott fund did was start buying it and act as a market maker to that market and tightened up the uranium price, and we saw it snap to attention. And you see the public, the share price of the Sprott fund all of a sudden snapping in alignment with the price of uranium, and all the equities following it as well. Now you see the utilities who haven't been signing up long going, okay, this isn't a bottomless well. I need surety of supply. I need to start getting back into the contracting business. We're going to start seeing those prices go up, but they're still not anywhere near that incentive price. So what we're in the middle of now, what we see happening is these prices are going to snap back up because nobody will sign a long-term contract at 30, 40, 50 bucks because they're not making money at those prices. So the long-term contracts you're going to see coming out are going to pump it back up into that incentive level. Same with the spot. The spot will follow or lead in many cases. And this is what's going on right now. I mean, this is what we're tracking on. This is why the in uranium, because we're seeing the price of uranium on both levels finally rebalancing itself, and we're kind of living through this rebalancing of supply and demand in the market. So I think what we will see, and I mean we've what else have I got up here? This is just a little bit more on they call it. They raised $80 million when they did the deal. Sprott has now at the market set up for $1.3 billion. And they've only spent about $300 million of it right now in uranium. So they've the ammunition they need to keep this thing tight and to keep the pricing tight. And that's what they'll continue to do.
What is your tipping point? When do you start making money on the average price?
Right out of the gate. I mean, when did I?
No, You were talking about, they're still running, prices going up, still below what it is in terms of.
That's right.
cost.
That's right.
What is the point where you break even?
You break even, well, depending on the mine, obviously, but that pricing is somewhere, it's a minimum of $50 a pound, and probably 60 to 65 is when you'll start seeing actually turning things back on, when they know it's up there in earnest. Yeah. And whether it stops there, I mean, that's the question now. You're right. We've seen this, now we're in the throes of it, the beginning of it, right? And there's my tip. There's the answer. I should have looked at my own slide.
So how much money do you make?
Well,
Not enough
no.
is the
How much can I make you? There's the answer. Right. So, so we're looking at that gap between annual, production and that big gap that we're trying to fix. Sprott has uncovered and kind of shown us that we're at the bottom of the endless barrel of spot market. Production levels are also going to take some time to restore. When Cameco turns MacArthur back on, it's an 18 to 24 month ramp up. Kazakhstan has actually, they've got certain permits that don't allow them to increase their production till I think 2024. So it's not okay, we're done, now we can turn things back on. As much as it took 10 years to come down, it went up. So it's, the question is what's coming up? I don't think it's going to go back down right away. But is it going to go up and kind of level off once things bounce out in that incentive price level? Is it going to exceed it? Or is the whole thing going to flip for a couple of years like it did back in 2007 and we wind up with $140 uranium for a little bit while? Who knows? That's the bet. But I'd take any one of them. is all good news for us in the field. I would be remiss if I didn't tell you a bit about us. That's why they sent me here. So we operate in Canada, in northern Saskatchewan. The Athabasca Basin, if you have not heard about it, is the source of the world's highest grade uranium. It's a bit of a freak show when it comes to that. The two largest mines there, Cigar Lake and MacArthur River, both have average ore grades of 20%. You mine it around the rest of the world at 0.15, 0.2. So it's an oddball thing. We've had drill holes come back with 50% uranium. You hit pockets up to 80. So it is goofy. And that's why there's a lot of exploration. When you look at exploration companies in uranium, this is primarily where we hang out because the upside is ridiculous until we get there. We have 12 projects, everything you see in orange. We're well established. We've been there for a while, so we have all of our relationships are intact. These are all we acquired over the years during the downtime or have maintained during that time. We've actually, there's I think about 180,000 hectares of property here. We've probably worked through about 400,000 hectares of property, eliminating the stuff we don't like, and this is what we're down to. For the last number of years, though, we have focused primarily on our Hook Lake project over on the east. Now, if anybody's familiar with NextGen or Fission and what's been going on there lately, this is a project that lies adjacent to them. It was a project owned by Orano and Cameco. They allowed us some time ago, and we're the operator. So we own 21% of that project. We're out there once a year, and our partners are footing most of the bill. So it's been very lucrative for us during a down period to have a project where we're making lots of discovery and we've got somebody else paying most of the bills, and it keeps us busy and active and in the light. The area is called the Patterson Lake Trend. It's us in orange, but you'll also see why we're there, and I'll show you in another graph. But there is a geological trend that runs right up the center of these projects. And found was Fission's Triple R deposit not that long ago, a little over 100 million pounds. The edge of the basin, I won't get too deep into this. I mean, the Athabasca Basin is big hole in the Canadian Shield that's full of sandstone. And, historic thinking was that you weren't going to find uranium outside of the basin. They kind of got proved wrong here because the basin runs pretty much along the edge of our claim line here, just outside the basin. Just to the north along that trend, after this was found, NextGen found their Arrow deposit. It's over 250 million pounds. It's a beast. And then as we worked up to the north, this was a deposit that we found with Cameco and Orano that we spent some time trying to define out. It's probably about, I'm going to say 12 to 15 million pounds. We never defined it as a reason being is Cameco and Orano can't free up budget for anything that doesn't look like it could at least come up with 100 to 150 million pounds. So once we determined we couldn't add a zero to that number, we continued to move on to the north, and we still have a lot of work to do. What you're looking at here is these black lines represent graphitic conductors in the basement rock, and they are our primary target. One of many things we look for, but this is what tends to align itself with uranium in the basin. And there's a lot of them here. It's this band up the center that is the trend that we follow. And so we've been doing more drilling to the north. We've been finding more mineralization, but of course we're looking for something massive. The background here, it's gravity. It's a gravity reading, and what it's shown us, this was done by the Geological Survey of Canada. This blue area is a domain change that they believe was probably the source of the heat that made all this possible, and deposited all this uranium up through here. One thing we do notice is that the uranium tends to be sitting on the transitions between the gravity highs, which is the pink or purple, and the blue, which is the low. So the triple R sitting on that, and Arrow and our Spitfire here, and it's given us a lot of other targets to get out there. So we'll be out there again in January. Most likely we're going to be working this trend over here, which has not been tested at all yet. And we will continue on our merry hunt for. It is exactly. Boy, how do you're a slide ahead of me every time. That's 28,000 hectares. Now you're going to ask me what that is in acres, aren't you? But I don't know. It's or meters. Well, I can tell you this. Let's try this. Okay. It's about, I'm going to do it again. It's about 8 or 9 kilometers from here to here. Okay. That's about 5 miles, yeah. There we go. Okay. These are all of our projects. I mean, because we've established ourselves well right there, as things take off, we're ready to take off as well. And we've been in a great position to do so. We've been focusing primarily on our Hook Lake project because that's where the money was and that's where our discoveries were. But now it allows us to open up a lot of projects that we've been either sitting on or waiting to continue. We've already spent a lot of money on them. A lot of first pass drilling has been done at Smart Lake, which is another project we joint venture with Cameco. Red Willow, Turner, Umferville, we've been able to get out there and do some drilling this year. Right now, as we speak, we're drilling it at Henday. So certainly these markets allow us to raise adequate money to go out and do some proper exploration on this, because it's not cheap. The formations we find are pods. They're hard to find. It's not a big flat sheet of uranium out there. And I tell you, most of the discoveries, like in the last 10 years in the area, companies spent between $10 and $15 million on that particular project before they got their first discovery hole. So it's not a light endeavor. And we've probably with Cameco spent a little more than $20 million so far on Hook Lake, and we're not near done. So
290 square kilometers
is
your hectares.
Oh, thank you.
290 square.
How many hectares was it?
28,000. 6,000 acres. And yeah, so Red Willow is 1.5 times that size. Or about half that size. It's a lot of property.
How deep is the deposit?
Well, they tend, like I say, they tend to be old. I was asked how deep are these deposits. So of course, the closer to the edge of the bowl you are, the lower it is. We are typically drilling 250 to 400 meters, which is 12,000 feet, 1,200 feet, 400 times 3. There we go. Which is relatively shallow because it very quickly gets deep and just unexplorable. It's about a mile down in the middle. So we're, now that we've got the capital to start, really aggressively moving forward on this, as I mentioned, we're drilling at our Hook Lake project. We're drilling on these other projects. We've got some drilling in January, depending on how things go at Henday. A couple of these we've never put a hole in. We've held them for 8 years and just done all the preliminary geophysical work on it and haven't drilled a hole on them. So we did drill a hole into this year and hit uranium. We're hoping to do the same right now at Henday. So it's a kind of a exciting time for us. And our stock this is our stock graph recently, but it's been with everybody else's. I mean, we're all kind of running the same game here.
So actual mine is in production. Is it a open pit mine? Is it tunnels in the ground?
Mine is in production. Is it open pit? Or it typically here it's been underground. There are open pit. They have open pit as well. So it's depending on the if I go back to go with that one. Hang on. So a lot of these mines around the edge will be open pit. But for Cigar Lake, MacArthur River, it's all underground mining. And as a matter of fact, that was the issue they ran into at Cigar Lake because, as I mentioned, these things are sitting at the unconformity. So where the sandstone meets the basement rock, which is somewhat of a wall. So the water pressure down there is insane. And what they do, it's like trying to mine something in Niagara Falls. So they freeze it. So they will go in on one side of the deposit and freeze the deposit and then follow that back up and blast it and haul it. And the problem that the Cigar Lake flood we were talking about there, freezing kind of got behind the blasting and the thing filled up with water pretty quick. So that was a rough time. So we got any other questions about any of this?
So there's been a lot of talk about supply security and developing domestic North American sources of supply and critical materials like uranium and developing like a strategic uranium reserve in the United States.
Mm-hmm.
I think that's been a lot of the tailwinds for the next gen stock for their air deposit. Do you see something possibly coming to play with Purepoint down the line?
Oh, we talk to them all the time. But
do you see that sort of
that.
supply security?
Well, that's when you're going to see a lot of the politics come into play, right? Because a lot of next gen's backing and fissions as well is out of China, and actually Canada right now has a policy in place that they've been promising to get rid of for some time. But any uranium mines in Canada have to be primarily owned by Canadian entities, so 51%, which is a problem because why would Japan actually walk away from a lot of their projects because they had great projects, but the minute they started to put it into production, they'd have to sell off 49% of it or 51% of it. That will go away. So I'm not sure that I'm answering your question, but it's just not that. The answer isn't all that fluid because it's next gen will probably be in production sometime in the next 8 or 9 years. And where their uranium goes or who buys it. Yeah.
You said you were cashed out, and what about the shares?
Right now, who holds my cash, our cash, not my personal cash?
Your paycheck.
Oh, God. This is going live, right?
Your wife is listening.
Everybody goes, now I'm in trouble. No, we've got about $3 million in the bank. We keep it in GICs, so it's nice and safe. And that's we've got adequate cash. We can deploy that money. It's interesting when we're working with the majors. Sometimes we find ourselves in a situation where we've got more money than they do, right? Because they're reducing their budgets on the export and we're, you know, ours is going the other direction. So we've got the risk capital to apply against some of these projects that internally they're not, you know, they're not able to move forward. That's how we first got involved with Hook Lake and Smart. Those things moved faster. Thank you very much, everybody, for attending.